Vedanta, that's in focus after the company's board approved a third interim dividend. Nigel joins in with the details and the implications of this. Nigel.
Well, that's right. Vedanta has gone ahead and declared a dividend of close to around 20 rupees on a per share basis. This is the third interim dividend. Prior to this, they'd already declared close to around 15 rupees per share. Now, the total outgo because of this 20 rupee dividend payout will be roughly around 7,800 crore rupees, of which, since the promoter entity has 56% stake in the company, they'll get 4,400 crores. Now, this is very, very good news because year to date, the total dividend payout is around 35 rupees per share. And why is it good? Because it puts the promoter entity at a far better financial situation. Remember, the concern for the company hasn't been what's going on at Vedanta Limited. The problem is that Vedanta Resources, which is the parent of Vedanta Limited, they have been sitting on a pile of debt, which currently is at around $5.5 billion. So late last evening as well, they have put out a release, Vedanta Resources that is, that they're looking to buy back some part of their bonds, which amounts to around $1.5 billion. And the lending rate, the cost at which they were borrowing this particular money was at around 13.75%. So why is this positive? Now they're going to be getting dividend. They could practically bargain for a rating upgrade, point number one. And the second part is they could refinance this much lower in comparison to this 13.75%. The street is working with a number of around 10 to around 11%. So good for the shareholders, they'll get this 20 rupee dividend, and better news for Vedanta Resources because now in terms of their leverage, they're in far better position right now. And the street likes that. And if that happens, if they get a rating upgrade, practically they could also bargain for a rating upgrade, which is the next trigger from here on. Back to you.
Thanks so much for that, Nigel. A very important trigger as far as Vedanta is concerned. Moving on.